Hello. Mic test. Hello guys, welcome to the 32nd edition of the Trading Opportunities webinar. This is Nirav, your host. And before we get started, I'll just wait a few moments for some of you guys to join in and check the audio and everything as always. So if you are already joined in and able to hear me and see the shared screen, then kindly do let me know in the comment section. So I'm currently checking on YouTube about the audio of this broadcast, if it's audible or not. Let me see the comments here. Okay, Philip, thank you for the confirmation there. Just saw your message. How are you guys doing today? How are you doing, Philip? And if anybody has joined from TradingView, how are you guys? Hi, Steve. Hello, Antoine. So sorry about that. I'll just quickly push my phone on silent. Okay, so guys, it looks like we are all set here. No need to wait any further. So let's get started with the webinar here. So first of all, as always, the legal disclaimer suggesting that all content presented here is purely for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading or investing, you yourselves will be liable for your profit, loss of profit, or any other situation arising from using this information presented here. Okay, you can read the rest on the screen by yourselves. Hello, Clever. How are you doing today? Now that we are done with the legalities here, let's just quickly go over the about a section. I'll try to keep it as brief as possible. So first of all, my name is Nirav Yadav. I have been conducting these trading opportunities webinars for quite some time now, and we conduct 3 of them per week: Monday, Wednesday, and Friday at 2 PM GMT. That's the time we always meet, a standardized time. Right, I am the admin and owner of 50eyes.com, which is the website where I've been presenting my views since 2016, last 7-8 years roughly. Right, and you can also see the past broadcasts are also published here on the website. Apart from this, as you already know, this website is also having a link directly with my YouTube channel, 50 Eyes Market Analysis, where this webinar is being broadcasted live, 30-second trading opportunities webinar. Right, you can check my past work also by visiting my YouTube channel and clicking on the live section. Right, you can check 30-second, 31, 30, 29. You get the idea, right? And I'm also the author of Think with the Market: Secrets to Achieve 80% Plus Accuracy using Elliott Wave's book. Amazon. You can get it on Amazon's Kindle platform, right? And lastly, and one of the more significant features I like to show off is my forecast accuracy for last what do you call 6 years has remained higher than 80%. Why I show it off is generally even 60% accuracy is considered very high, and we have a track record of 6 consecutive years with 80% plus, which is 2021 82.22%, 2020 is 88.52, 2019 84.88, 2018 84.61, 2017 2016. You get the idea, right? So that's about it for my quick introduction. And by the way, if you want to check these records, you can check the instrument name, the date, the analysis, and then the actual video which is used to get to these conclusions. right? And scroll down on this spreadsheet and check the rest. So that's about it for my quick introduction. Don't want to take any further time here, and let's get started with our discussions on various different charts. And the way we will proceed, before I move any further, I'll just quickly point out we will excuse me. We will proceed with this pattern. We'll start with Euro USD, EURCAD, USDJPY, EURJPY, crude gold, S&P Nifty, and then Bitcoin at the end, right? And so far, our tally is 31 trades discussed during the last 30 webinars played out precisely. We will check if anything played out from the last discussion. So 31 is the number for the last 30 webinars. Without any further ado, guys, let's get started over here. And our first discussion, as always, will be Euro USD, as you can see over here on screen. Euro USD, we have been following for quite some time, and we were able to capture the longs here precisely at this turn around 1.04993, roughly speaking. And since then, we had the two targets. This one was our target one at 1.07695, and the target two was at 1.09446. Now, we had already booked partial profits, minor positions which were remaining. We were trailing them for the next target, which is target two. Practically speaking, this should be considered as target two achieved already, because the difference is very minor from the current price action. But more important is the pattern which this market is following. So it looks like it may be following a ending diagonal pattern here. Maybe we do not have the confirmation for the same. And as we discussed last time, if it is really the pattern, then it should go like this, and it should basically go below this orange trend line. So that's what we are waiting for, move below the orange trend line, basically, right? So since we do not have that, we'll just see what it can do right now. So if this wave 5 is still continuing, then it can continue going higher. In that case, you already have the minor longs, right? So no new longs need to be entered. And if it does not continue higher, then first sign of weakness will come at the clear break of this white trend line, right? And furthermore, we want a break of actually this orange trend line. This orange trend line is actually important. White one is already temporary, so it can change. We can change the angles and everything for the white trend line. So that's our setup for USD. We wait for confirmation on the bearish side, right? And while the bullish side, we do not have a clear trade setup because we already have longs. We don't really need to. But in case you are looking for new longs, then I don't think there is any point in looking for new longs unless it takes out 1.09697. That is at least a little bit higher than our target 2 level. At that point, it will most likely relegate out the diagonal scenario and continue the upside moment. So that's my quick take on Euro USD. Let me know, guys, if there's any doubts. If you don't have any doubts, please do type in understood or clear or something like that in the comment section. And we'll move ahead with the chart EURCAD next. I'll wait a few moments here to see if there is any questions. Thank you, Clever, for the confirmation. Let's head over to next chart. EURCAD here. EURCAD, we have. I mean, it is following the analysis, but there is no trade, at least not for me. But for those of you who are not following us from the last few webinars, I'll just quickly point out what the analysis is. Thank you, Steve, for the confirmation. JP guys is asking what is a short for Euro USD. As I just discussed, we wait for that trend line break, and after that we will be interested in some shorts. Just check the recording. Everything is discussed very clearly in that. Once the webinar is complete, of course. So with EURCAD, let's continue and let's see what's going on. So first of all, very clearly, we had stated many times that we expect this market to be having a possible A down, B up, and C down, right? Once the C is complete, then this market can fly high. But as I said so many times, it is unclear if the B is complete here. Secondly, it's also unclear if the C is complete here. It may just be continuing. So long story short is this market can remain sideways within this box range, right? And as long as it remains sideways, we don't have a clear conviction of what to do, right? So swing perspective wise, it is long. If you are going to enter with 10 lots, you can enter with 2 or 1 lot here. Let's say +1 here. And if it continues down, you can add +3, +4, something like that. And if it reverses as we are expecting it to, you can then at the break of the last high add the remaining 6 lots, right? So that's the strategy here. I've discussed it so many times, and there really isn't much to add here to it. So I'll just conclude the analysis here. If there's anything, you can just type in the comment section. I'm not even going to wait for the confirmations on this one. So USDJPY is our next discussion. So USDJPY, as we discussed last time, it is having bearish bias, right? And our point of discussion comes from level of 138.162, point of reference or the starting point of our discussion. And we have the bearish bias with the count as A down here, B here, and C down here, right? So now the thing is that because we do not have a confirmation, we have not initiated any new shorts since the last time we closed the existing ones, right? Now the thing is that this B may have completed as a triangle because it could be taken as a running A, B, C, D, and E, right? So it could be considered as complete. However, it's a wave B, and wave Bs have their ways of forming complex things beyond ordinary imagination, right? So in that case, we need to remain cautious. However, there is a sell setup, as we have already discussed. We would like to go short below 128.366, or at least look at the market with the conviction of possible selling opportunities. Secondly, there's this white trend line, right? If this is breached to the downside, then it is again a possibility, or what do you call, the first sign of weakness, right? So as such, I've also placed an alert on this white trend line, as you just saw. So basically, keeping that in mind, it is a sell, and we wait for some downside confirmation. White trend line and the price level we already mentioned. And as for the upside, if the wave B continues to the upside, then we will have to see. We will have to wait and watch how it proceeds, which pattern it is forming. Right. That basically is the new addition to USDJPY, the trend line, and that's about it. That's the addition. Let me know, guys, if there's any specific questions you have regarding this chart. Yeah, one additional thing: if the market continues to the downside as we are expecting, then the downside target, I have readjusted it to current level is around 126.248. Previously, it was a little less, but I redid the analysis, and this is what we expect. So Basli is asking about Euro USD. We have already covered Euro just USD like 5-6 minutes ago. Just go to the back of the live stream or check the recording once it's complete. It's the first instrument we discuss basically. Philip is asking or saying that I think that is some strength left over. Breaking 132 would reverse the trend. Let's see, where is 132? Not really. Breaking 132. Let me check one more thing. Not really. I don't think so. That 132. Yes, it will suggest that the downside is becoming less and less likely. That is definitely true. And by the way, the invalidation level is for only the triangle. It's not for the whole count. But yeah, it's worth noting here that above this invalidation level, which is 131.523, the downside counts become less likely. So this triangle count, we are really expecting it to play out, and if it does play out, it will be the best sort of short selling opportunity here on this counter. So it is a market to watch for shorts right now, right? So I think that's about it for this discussion. Okay, I don't think there's any other doubts. If there is, do type in the comment section. We move over to the next chart of EURJPY. Okay, so EURJPY is again doing things as we already thought it would do. Okay, I did read. Let me refresh this chart. So if you are not following us, EURJPY, we have been able to capture some good selling opportunities. We were able to capture this fall. right exactly at 142.154, and then we have been able to capture parts of this fall as well, and some other movements here and there, right? But these were the significant to which I wanted to point out. Now, those were the discussions again done in the same trading opportunities webinar series. So if you want to make the most out of them, you need to watch every single one. And just for the new people who are joining in, we do a webinar like this 3 times per week, Monday, Wednesday, Friday at 2 p.m. GMT. Okay, so considering the current scenario, EURJPY, it, as I said, is not really doing anything out of the ordinary. We have already placed a count and it seems to be following that count rather well. So if you consider the current price action, we have what you call a diagonal coming to the downside, and the down one second, let me remove everything. So this is our point of reference or the starting point of this count, and if you are not familiar with what a diagonal is, you must be knowing what a wedge pattern is. So this is one forming to the downside. After that, we expect the market to form a corrective three-wave structure like this, or maybe this, something like this, right? So it is already doing that from here. Now the thing is, as we already discussed last time, either it could just fall from here, or it could go up and then fall from there. So it has not fallen right away. So basically, that's why this upside alert is. And now let's just check out quickly the targets for the upside possible reversal. If this market does go to the upside before the reversal, then we expect it to go within the price range of 142.85 to what is this 144.18. In this white box, as I just mentioned, the price levels, we expect this market to reverse, unless of course it reverses right away from the current level. So this is basically our analysis. Upside, we have placed an alert for tracking this possible reversal zone, and downside we do not have a confirmation yet, so I cannot comment on any trades for the downside right now, right? And once the market does reverse, as we have discussed again many times before, our initial or the minimum target we are expecting is actually minimum is below 137.38, which is the last low, but then the expected target is 135.96. That is the minimum range we expect the market to go. Of course, updated targets and further downward movements we'll just check as the market continues or does not continue according to it, then we will update the count. So that's basically it for EURJPY, right? Let me know, guys, if there's any specific doubt you have on this chart. I'll just quickly go over the comments for it. Otherwise, just type it understood or clear or something of that sort. Another noteworthy point is that we are seeing some trend line also incoming, but it does not seem to be a very solid reversal just yet, but just keep that in mind. It might offer some resistance, so that will also be something to keep an eye on. Okay, so it looks like everybody is clear on it. Thank you, Steve. Thank you, Clever and Philip, for the confirmations. Let's head over to next chart, crude oil. So WTI is crude oil. Last time when we discussed this chart, we were expecting some upside movement based on these lines, which you can see here. I'll just readjust them very quickly. So this is the upside diagonal progression we were expecting on this counter. It is worth noting here that this is a counter trend upside movement. So it is very much possible that this market does not follow this count and just falls straight off. And for that very reason, you can see the red arrow on the downside, which is the alternate view suggesting that the market does not follow any of it and just falls. Right. Now let's discuss what the actual count is. So what we are expecting was or is that from this point of reference around the price level of 70.249 something, we expect that maybe this market is following a possible wedge pattern, right? If it is following a wedge pattern or a diagonal, then it will be one up, two down, and then there should be a 3 up here, right, which will be followed by a 4, and then which will be followed by a 5, right. Once the shift is complete, we expect the market to give a sharper fall. That's the general idea right now. Now, based on this analysis, last time when we discussed, we were expecting that this 3 is remaining, so short-term longs might be possible. However, we are already aware that everything we do on the upside is counter trend. And why I keep saying counter trend is important, that in a situation where you are trading a counter trend move, which which is expected to follow a huge reversal, then you need to keep in mind you cannot take on full size positions. If you are trading crude oil with 10 lots, then you cannot trade it with 10 lots this time. You need to trade it with 2 lots, maybe 3 lots maximum. Okay, because we can be wrong, and if we are wrong, then the market will fall straight. Actually, not even wrong, because we are already expecting downward movement. So in a way, we would be right if it falls straight off. So anyways, long story short is we still expect that this diagonal pattern is still continuing to the upside, right? There is no real confirmation as of yet, at least not that I can say with 100% conviction. And as for this wave 3, it does look like this is following a 1 2 3 4 5 for an A, B, C for a B, and then it will be up for a C. So it's as if that this count is still valid. Okay. And as for the possible longs, now if you are interested in longs, if I would be interested in longs, it would be somewhere here around 81.553. Right. So basically, only near the last high, I would add some longs, and that also will be a short-lived intraday kind of trade. Okay. So that's our expectation on this chart of crude oil. And I'll wait for you guys to confirm, or if you have any doubts, please do type in them in. Internet saying wedge is nearly taken to downside. Not really. I think we will need some more confirmation for that. As of now, it actually looks a proper B. We remove everything. It does look like a A down here, a B up here, and then a C down here. So I wouldn't agree with that. But yes, it may reverse, but that's something we already know. Eyeing closely on crude oil. Yes, if it breaks, Philip is saying if we break 78.5, can we say that we go down straight 78.5? Let's see. Aren't we already at 78.107? So it looks like either you have mentioned incorrect price level or you were asking something else. Or maybe you are using a different data feed. And as far as clear downside is going to be counted or considered, I don't think below 74.23 we can say that. Below 74.23, I think we can say that it's having more downside possibility than upside. Okay. So that about concludes the analysis here, and I think I have answered your doubts. Of course, if something is remaining, then you can just let me know, and we'll just check it again. And right now, there is a question, wedge invalidation level, where do you see? Yeah, as I mentioned, below what is this 74.190 actually. That's the exact level I have marked. Below this level, I would say I don't think it's a wedge. Actually, it will be parallel before that. Somewhere around 74.5. 74.5. Around that level, you can say that this is not a wedge and it's falling down most likely. Okay, so that's about it for crude oil. Let's head over to the chart of gold, which by the way has given us 11 consecutive winning trades. And I'm only talking about the bigger opportunities, not the smaller ones. So in gold, before we move any further, let's just quickly see what we have been able to capture so far. This is just a quick summary or a flashback for people who are joining in new. Anton saying very good analysis for oil. Thank you, Anton. Thank you for the comment. So gold, as I have mentioned so many times, we have been able to capture parts of this long, and we have been able to capture this long and then parts of this long. And where was that? Yeah, we were able to capture also this leg down and then this leg up and then parts of this move up. So I'm not just joking. We literally been able to capture these things live. You can just check these webinars, the past webinars around this level, somewhere here, somewhere here. Just check the dates and check the webinars there, and we have predicted these levels in live market. Right, so 11 plus trades on gold we have captured. Actually 12 if we consider this last small fall which we were able to capture in live market. Again, in live market session, I said that there's going to be a fall down and the minimum target was below wave low, and then this was the next target and this was the next target. So anyways, if we count that, as I said, we don't generally count the smaller moves unless it was very clear and fast. So we have been able to capture 12 plus trades. So that brings our tally to 32 trades in the last 31 webinars with this gold analysis. And with that out of the way, let's just see what it's doing. So first of all, it is possible that this market has completed the A down, B up and C down, right? It is a low probability count that the C is complete here. If C is complete here, it can just fly high from here, right? But it is low probability because generally what I have observed is that the market will at least touch this level of 23.6 around 1912.78. Right, keep in mind the data feed we are using is on the top left over here. You might be using a different data feed and that might lead to a different, what do you call, price level. So you can just check that out your end. Now, the thing is that because we expect the correction is continuing, we expect that once this market does the wave B, right, we expect another fall. Now, what do we expect of wave B? We expect that if this market is following this count and this is heading currently higher for the wave B, then this market can reverse between the levels of 1934 to 1937.5, or let's say 6. 1934 to 1937.6 is the region where this market can reverse after completing the wave B. So obviously we need to keep that in mind. Above 1937.6, if it goes, then that is a initial sign that the bulls are taking control. It's not a confirmation, it's just a sign that the bulls are taking control. So the current strategy is wait for the mentioned level, right? See a possible reversal. If it forms, then head over to analysis and look for shorting opportunities. So long story short, expected reversal region, if we see a reversal here, then we look for targets T1 1912.78 and T2, let me just point that out, is 1890, 1891, let's say. So these are the levels we will look for, right? Invalidation, as I said, we need to see it established above 1937. Unless it is established above 1937, we can't really say that the bearish side is relegated. Okay, and as such, this market has given so much upside. Literally, it has moved so much up that it can at this point in time consolidate a little bit or even form some strong bearish candle at once. So that's our analysis on gold. Hopefully it's clear to you guys. If not, do let me know what's your doubt. If it is clear, do type in understood so that we know everybody is on the same page and we can move ahead with our next chart, which will be S&P's 500. Again, interesting discussion, and I'll be discussing another outlook on S&P this time. One more outlook, not another. Thank you, Philippe, for the confirmation. What about you other guys? Antoine is saying, same for gold. I track good analysis like oil. Thank you, Antoine. What about you, Clever, Steve, and the others who are online? Hey, Jill. Thanks for the confirmation. So now let's head over to S&P's 500. S&P's 500. Which one am I following? This one, right? So S&P's 500. Last time we discussed some bearish possibilities. We discussed some reversal levels. What were those? Let's see. So this was a yellow trend line. We were expecting that the market can take resistance at this trend line. So what has happened is that this market actually did take resistance at this trend line, right? It did shoot up a little bit more than what I would generally like to see. But oh well, the market does not always do exactly what you expect it to. Right. And can it still reverse? I had something else I want to discuss here. So this was one of the counts we discussed. Let me show you what I'm talking about. This was one of the counts we discussed: A up, B down, and then C up as a diagonal. Right. It is still a valid count. It is still a valid count. We did see some overshooting here. Actually, I had to discuss one thing or check one thing before we discuss further. Let me just quickly do that. Yeah, it is still valid. So it is actually valid for a bearish count, right? And now what I'm actually talking about is that on the higher time frame, this is a daily chart by the way, we are expecting that this market is doing something like this. If the B is complete here, then this market should fall. So can't be any further clear from this. That's why we drew this trend line. This is the trend line for the B. Okay. So if we are wrong about the bearishness, then the first sign of us being wrong would be that the market establishes itself above this trend line, right? And specifically, it should first establish itself above, that is price action should be above the trend line, and then next it will take out this high of 4134.5 or whatever that is. It is 4136.9 actually, but you can check at your own level what is this price level, because again data feed is FX, you may have different one and that might lead to different price. Okay, so that is the bigger picture analysis. Now as far as the downside is considered, and as I already mentioned, we are expecting possibly bigger downside, and even if that's not the case, we are expecting at least this much. That is, we are expecting at least a move below this low of roughly 3766. Right? So as long as the market is below this trend line, this count holds. So for right now, we only look for bearish setups. And let me see if there is any confirmation we can have on this. So we already have discussed that the break of this white trend line to the downside will be one of the triggers for possible selling opportunities. It has not done that yet, so we can just mark this. Crossing would have been enough, but I've just placed less than. Hopefully that's enough. We have discussed the longer picture analysis. We have discussed when our analysis will be invalidated to the downside and our expectation of entry. That is, where do we think we should enter? That pretty much covers my take on S&P's 500. Pretty neat analysis, I would say, and definitely something to keep in the watch list. Because if the downside analysis plays out, it has heavy bearish implications. Just one more important thing to point out at this point, 2nd February. Yeah, 2nd February, we are going to see some important news events. So generally, I don't pay attention to things because whatever news events should unveil or reveal should be clear on the chart. But what happens sometimes I've observed is the markets might wait till that point and drag on to the drag on sideways, even though the direction has been decided until those dates. So just keep that in mind. Other than that, that's about it. I'll just wait a few moments to see if you guys have any doubts on this counter. Otherwise, we'll move to Nifty, which will be followed by BTC. So let me know, guys. I can't see any comments. Okay, yeah, there it is. Nice analysis. Thank you, Steve. So, what about you other guys? Are you still able to understand whatever we're discussing? Philippe, Clever, Antoine. Thanks, Jill, for the information. Let's head over to our last two discussions. And by the way, guys, tell me one thing. Are you guys following the news events or the news releases from Hindenburg, the famous agency which is known for short selling based on their research? Are you aware of their latest target and what they are plotting? Not plotting, what they have came out with. Tony saying S&P is still tricky. Not you, but moves. Yes, that's true. Philip is saying clear. Okay, it does not look like anybody here cares about Hindenburg or anything. But just so you know, this is a firm which is known to do market research upon possible big time frauds in the stock market mostly. And they have unveiled some very serious scams in the past. So currently they came out with a report that one of the India's biggest companies, Adani Enterprises, is running a scam. That's what their allegation is, right? And based on that, the market got all heated up because Adani Enterprises is a stock listed in the Nifty 50, which is the index of the Indian stock market. And then there are some other stocks which will get affected if that one falls. So currently we are at a very interesting situation here. There is some strong opinions from this company, and strong opinions can also arise because we have the finance budget coming in on 1st February. So anyways, the whole point is that Nifty can remain extremely volatile, and it actually is extremely volatile. Today itself, it first went up and then down and then up. So that's volatility at its play. And it's exactly the kind of situation we traders like. Anyways, I'm not getting any more into the Hindenburg drama. It does not look like you guys care, and not much point in discussing. We are price action traders after all. So let's focus on the Nifty chart here. And what I can see here is that possible downside continuation cannot be ignored. However, it is becoming a bit risky here because possibly if you look at the past price data, move or a pullback of this much magnitude generally does suggest continuation of the pullback, right? So this much magnitude pullback suggests continuation, but because my count suggests that some more downside can be seen, I am currently thinking that next session we might see downside. And what are the counts? We expect the counts to be following. We expect this to be wave 1, 2, and then 1, 2, 3, 4, 5 for 3, flat for 4, and then down for 5. Previously, I was expecting that the 4 will not go that much up. It will possibly come a triangle. But this has definitely reduced the bearish possibility by going this much up. Right. Next, if it takes out the last high around the price level of 17700, 17704 actually, or 17707, then it will sort of what you call even reduce our bearish possibilities, right? So for this market to follow the downside trend, it is sort of vital that it remains below 17707, It is not a confirmation of anything. If it goes above it, it's not a confirmation that it will go up, but it will just reduce the downside possibilities. That's actually what I'm saying, right? And as far as the bigger picture counts are concerned, those are actually important, and I'll discuss them at this point in time. This is the chart of Nifty from 1H time frame, and point of reference is around 18605. So I'm just pointing it out very fast that we can take this as an A, we can take this as a B, and if you're catching my drift, the C is still incoming, right? Now I'm just saying this is the bearish possibility I'm discussing, right? I'm not talking about the rosy merry picture where things are always going up. Generally, people who are into just investing, they like to talk like that. They don't want to discuss bearishness, but that's not what we do here. So if things do fall out of place, we definitely think so they can. And I don't think the wave C will complete here. We will probably have to reevaluate our counts, but I think we have some bearish counts. 1 second, let me just quickly check. Straight down bearish count, we do have one. Yeah, this is the bearish count we actually have running. 1 here, 2 here, and then dot 1, dot 2. So this is the dot 3 incoming, dot 4, dot 5. So I'm just pointing it out very roughly that this market falling fast and sharp will not be anything unique or anything unexpected. I'm already expecting it since a long time, right? If it does it now near the finance budget, that would only be expected, even more expected than last time. So that's the quick bigger picture outlook on Nifty. I just wanted to discuss the bearish implications here, which are quite severe. And let me know, you guys, if you have any doubts. I'll just take them in the comment section. If not, just type in understood and we'll move over to our last chart of BTC. Steve is saying, I have heard of Hindenburg, but not familiar with recent analysis. Interesting. Yeah, one thing, there is a video by a channel named Cold Fusion, and it unveils a scam by a company named Nikola. This company was running a big evaluation, and they were raising funds from General Motors and some other big names, and they were saying they have discovered hydrogen powered engine technology. So it was all a scam. I think it was $1 trillion scam. I think I may be wrong here, but I think it was very big. So Hindenburg was the company behind unveiling that scam. So they are that big. So Cold Fusion is already a well-established channel on YouTube, and his documentaries are quite well researched. So I won't talk any further. Just check his video. It's a very interesting video. I know it's not price action analysis or anything, but still good to know a little bit of the major players and how they do their manipulations. Okay, so that's about it. I don't think there is any doubt on Nifty's 50. So let's quickly head over and just check our last chart of BTC. Thank you for the confirmations, Philip and Jill. And yeah, guys, I forgot to ask, just hit the like button and YouTube or wherever, and make sure to share it. I have observed something out of the ordinary. Generally, the views were increasing for the channel, but suddenly, since the last 2 webinars, instead of increasing, I'm finding the views have decreased. So not sure what's going on there. Maybe some of you guys were sharing it in some important circles and have stopped, or I don't really know how YouTube algorithm works. So anyways, long story short, I'm just requesting you guys to share the content again with some of your friends, colleagues, and circles. And the way these things work is, after a certain point in time, when you have shared enough and I'm starting to get 500, 600 views per webinar, then YouTube algorithm will most likely push it very severely, and the channel itself will grow without much effort. So we are currently not at that threshold, definitely currently not at that threshold. So your continued efforts are definitely required here. So that's my quick request from you guys. Kindly do share the content as much as possible until we reach that level where we are getting 500 plus views per webinar. So yeah, let's actually head over to our analysis on BTC. And yeah, guys, one more thing. If you are on Twitter, do make sure that you are able to like and retweet my tweets. My handle is 50_EYES. Right, that also probably will increase the reach of the channel. So yeah, sorry about the little distractions. Let's head over to our BTC analysis. And as we discussed last time, we were expecting that we were not expecting. We were saying that unless the market established itself above 23,200, we cannot say with any certainty that this market is going up. Right now, it has gone above 23,200 two times, so it will not be out of the question to consider the bullish scenario with much more seriousness. Right. So, what is the bullish scenario and what is the seriousness we are talking about? We are expecting that once this market completes the wave 4, we are going to see another leg up. Now, what is this wave 4? This wave 4 is the price action starting from this point of reference of 23,811. Okay. Now, theoretically and practically, this wave 4 may have ended here. So, what I'm really saying is that this market can take off from here as well. So, long story short is Bitcoin, we expect possible reversal levels. Let me just conclude it very quickly. I may have said too many things and it may have confused some people. So, first of all, we are now taking the bullish scenario a little bit seriously, right? Now, how do we take it seriously? First, we determine the levels where the market can reverse for upside. What are the levels? The levels are respectively 22,031, 20,934. If it goes below 20,934, then bearishness is definitely in play. As long as it is either reversing from this level or this level, as I just mentioned, 22,031 and 20,930 something. As long as it is reversing near these levels, the bullish scenario is intact and the bullish scenario is expected to play out. Right. And other than the reversal level just mentioned, it can just straight out take off. That's again a possibility. Right. As far as the targets are concerned, if it's really going to go up, it is Bitcoin. Who knows where it will stop? So, but we don't talk stuff like that here. We talk logic and reason. So, actually, I don't even have to take it. So, as you can see here, we have 2,893 points or 18% up move here. If the market really decides to reverse from the current level, or let's just say it reverses from 22,030 levels, then 18% you can see will be somewhere here. 26,069, right? So this is my very rough and very simplistic outlook. Of course, this market can be doing something more complex, but the count holds and the analysis is also well put, right? This level for bearish confirmation, which is below 20,930, is, I think, very well established. And below this, definitely we should be looking for bearishness. And the upside count is also very well playable, right? I'm not sure how many of you guys trade BTC. But oh well, for those who do, that's the analysis. So with that, I would say that we have concluded all the discussions we do. And as always, guys, I will look forward to seeing you guys in the next webinar, which will be on... Okay, it's on Wednesday, 1st of February. Very important day for a lot of instruments. 2nd February will be even further important than 1st February, but okay, 1st February will do. Very important for S&P and Nifty. And of course, a lot of markets get affected by S&P's movements. So that's about it for this discussion. I hope you guys are able to share it, and I'll wait for a few seconds to see comments here. Good analysis of BTC waiting for the wave 4 correction playing out and invalidation less than 2,500. Thank you, Antoine. And Steve is saying thank you, much appreciated. You're most welcome, Steve. Okay, guys, I'll just close the webinar at this point in time. And thank you for joining in as always. And I'll hopefully see you in the next one.